Hey everybody, Boris from PK Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar for October 29 to November 2nd, 2018. And the theme in this upcoming week is really a little peace and quiet. We have had a pretty volatile week this week. Lots and lots of geopolitical risk, a lot of market risk, and a lot of turbulence all across the asset markets, not just in FX. And FX, of course, has felt its brunt of risk-off flows as the week continued. So as we start this week, a lot of the ranges have kind of moved down. If you look at the euro really tested its multi-month lows here near the 1300 handle. And now the range really kind of rests in the 13 to 1600 level. And I'll talk about that in just a minute when we look at the charts. Yen also failed, but held this 111 level for the time being, and it's actually 1150 if we're going to be very precise. And that's a very, very critical hold. I'll talk about why if that breaks, we could see a much further steeper decline in the yen on the charts. And cable was just a disaster from the moment go. Brexit remains the dysfunctional child of the FX market. Nobody in UK seems to know what they're doing. The Conservative government and PMA are in complete disagreement as to how they're going to try to negotiate some sort of a soft Brexit exit. The Irish situation is still very much the sore point, but the real big problem is, of course, trying to negotiate some sort of a deal that's going to allow them to have customs union, and that's if they're not going to be able to do that, that really becomes an existential threat to the UK economy. So cable just getting pounded and pounded and pounded to the downside. This 27 really starts to hold, but it's essentially a political risk at this point, even though we do have some economic data on the calendar. So economic data on the calendar this week is actually pretty significant across the G7 universe, but it probably is going to play second fiddle to a lot of the big macro risks that we look at. On the US side, we have the personal income, personal spending. This should be kind of interesting. Kathy's bearish this data, and you know, today, this is Friday as I'm recording this in New York. Today we had the US GDP numbers, which were nominally better. I mean, they came in at 3.5 against 3.3 expected. And yet the market really sold off hard on that data. And the reason why is because if you look underneath the numbers, fully 60% of the GDP gain this quarter was from inventory building, which essentially means supply side driven, not demand side driven. It means that basically companies anticipated more perhaps due to tariffs than anything else, that they needed to store goods ahead of increases in prices. But there was no pull. There was no real strong final demand. And the reason why there's no strong final demand is because there's, of course, no income. Even though the economy continues to grow and jobs continue to get manufactured, they're all essentially McDonald's jobs in the US. And when there's no significant bump across the employment population, not just at the margin where the employment population just simply creates new, small, low-wage jobs, it doesn't really translate into a large final demand in the economy. So again, here, personal income, personal spending, another key data point. The bottom line in all this is sort of the big macro bear argument, which I've been making for quite a while actually, is that Q2 was peak US growth. And so if Q2 is peak US growth, essentially you're looking at nothing more than just continuous declines, a deceleration in the rate of growth, and therefore a decline in asset growth, and of course a weakness in the dollar as we go forward because of all that, because it's all going to kind of ricochet through the interest rate spectrum, through the asset spectrum, and create lots of pressure on the dollar to the downside. That's why this week is kind of setting up as an important week for the dollar, because we really need to see a resurgence of wage growth to kind of resume the benign US dollar scenario growth going forward. On the European side, it's just still a mess also. I mean, if Brexit is the ultimate existential problem, then the Italian story is certainly a very nagging problem. There was some positive noise at the end of the week, and what's interesting is that the technicals are actually showing us a bounce in the euro. We're going to talk about that in just seconds. I look at the charts, but overall, nothing on the economic front here. Draghi came out on Thursday, tried to really talk up the European economy, talk about the fact that ECB was going to be moving to normalization, so on and so forth. The market really didn't believe him. And the reason why is because, of course, growth really seems to have slowed down. German growth has really slowed down, which is the key thing. And we also, by the way, are facing This is important as we open up on Sunday night, Monday morning to you guys, facing the German elections over the weekend, which could be very, very negative for Angela Merkel. I don't know how much of a political risk this will be, but we'll see if the markets react and really react negatively to that. Because if there is a genuine threat that Merkel loses her stewardship of the German economy, that creates just a huge, huge political risk to the whole Eurozone project, in my opinion. Merkel really is the glue that is holding the euro together. And if she goes, the instability that creates with the Italians sniping on one end, the core economies on the other end, the Brits trying to get in and get out, really creates almost as much of a dysfunction, no, more of a dysfunction in Europe than dysfunction in the US. And it just basically creates, I think, a very, very negative, what we call the vicious cycle scenario, where things lead to worse and worse things, instead of virtuous cycle scenario where good things only lead to better outcomes. Anyways, as we move forward into the middle of the week, more second-tier European data. We have ADP out of the US that's going to give us at least an idea of where the jobs are. If we have a big decline, if we get down to 150, that will just be another point of contention that Q2 was peak growth. And that's, I think, a really, really important point to basically, drum on as we go forward. Then the Bank of England, a rate decision, which will be non-event. They're not going to do anything, and they're certainly going to very much pay attention to the Brexit negotiations. Amidst all that, you'll get a little bit of UK data with UK PMIs, and so that'll be interesting to see if that's if all of this uncertainty is translating into lower demand as we go forward. And then finally, of course, Friday, the big marquee event on the U.S. side, we get the non-farm payrolls. Most importantly, on the non-farm payrolls in the U.S. side is going to be wage growth. It's projected at 0.2. That's very paltry. 0.4, and it could be game on for the dollar. We could have a complete change of sentiment, and maybe the market gets a second wind. If we don't get that, I think we see some very serious problems for the dollar going forward. So now let's take a look at the charts here and see what the charts are showing. If you look at the chart right now, just sort of in a pure vacuum, this looks really good, actually. If you're a bull on the euro side, the first thing you see is a clean, clear double bottom formation. We're closing near the highs of the day. Nice big doji on the bottom here. Nice big, it's sort of like a hammer, I guess. And certainly scope for 1550, 1600. Certainly scope all the way out here. Well, let's say 1550 towards the long-term moving average to kind of nip the mean reversion back up to the long-term moving average. All of this sounds great, but we are obviously facing this big political risk over the weekend, which we don't know how it's going to come out on Monday morning. So be watching that very carefully. If that passes through without any serious possibility of disrupting the German government, I think you have a reasonable chance here for a nice long euro, because the technicals are certainly flashing a buy point. In fact, to me, this is the strongest chart I've seen as we close the week in terms of a signal to do one thing or another. Everything else is really, really indeterminate. So let's take a look at the pound, which did not react nearly as well, and is just kind of barely eking out a bottom over here. It is creating a double bottom over here, but remember, if you look at the charts here, there's still scope for the secondary bottom here, another 150 points down, or maybe even 250 points down. Sorry. The point being is this 27 is still a vulnerable figure to explore, and it's all really going to be driven by what's going on with PMA. So far, nobody seems to agree, and she doesn't seem to have enough support in the parliament to kind of negotiate a soft Brexit deal. If we get, in addition to that, very, very dovish Bank of England and disappointing UK data, just kind of the whole amalgam of pressure is going to bear on the pound. And the problem with the pound always is that it really doesn't matter what the preponderance of evidence is. It's just simply what the latest headline is. If the headline comes out that, hey, they finally negotiated a peace treaty on the Irish border deal, boom, we see probably 130 at this point. So now the difference is, of course, yes, one of the interesting things is that a lot of damage done this week, it really now only takes us to a 130 on any kind of a serious bounce. And after that, we have to see just how strong and how convinced the market will be on the trade. So we are clearly now creating lower lows, driving down in a clean, clear down path on the dailies. And basically, cable is a sell unless proven otherwise. And yen also just getting hammered. The only saving grace in the yen trade here, and as I'm watching this, they are marginally. We were down significantly, 500 points on the on Dow Jones. We came back up. The futures are just marginally down into the close. But the only saving grace on the yen here is that we held the 1150, or we didn't hold the 1150, but we just bounced off of it. The low was 37, so we kind of bounced off of it. We held the 500 period SMA, and it's a marginal support figure, but it's so skittish. Any negative flow here that takes out the 1130s and takes us through the 1100s really creates a much more negative construct. We basically then destroy this whole long-term uptrend. I mean, we sort of already kind of, if you want to stay completely kosher to the trend lines, and you kind of look around here, we sort of destroyed the uptrend really this week with today's price action. But given the fact that we have all this horizontal support, you could give it a pass. You really you can't get too aggressive on the short side at this point. The one thing that is pretty clear is that the 1300 now becomes a pretty serious resist point. We failed at 1400. This is a big resist point. And really, to get super bullish and super confident on yen, you got to take out 13 and hold the 13 to remount a uptrend in the dollar yen. Right now, it's clearly signaling a change of regime towards a downtrend, and a break at the 1100 really creates a lot of damage technically that could then open up a run all the way down towards the 110, 109 support. So that's pretty much what the majors are. If there is no truly serious danger up front in Germany over the weekend, then I think probably the strongest trade as we open up this week is going to be long euro for a little bounce back up to the 1500 level. Wish you guys the best luck, the best trading. Boris, over now.